GKFX Prime presents the Market Analysis Webinar.
Hello traders, hello everybody, welcome back to another weekly video. As ever, I'm your host Dima, looking at some higher probability setups for this week. Let's scan the markets and see what we've got for this week's charts. We are now in March. We have NFP week behind us, so the markets usually settle more after NFP week. So let's see what we've got for this week's opportunities. Thanks very much for joining me, and hope your trading is going well. As always, hit the like and subscribe below, and comment if you have any questions or suggestions, or you want to have a look at your setups and your ideas together if we're not already covered it in this video today. So let's begin as ever with the weekly calendar, the economic news for the week. And what we've got this week on Monday, it's empty day, nothing there. Tuesday, we've got the claimant count on the pound. On the dollar, we have CPI, so watch out for that one. CPI lately has been a mover in the markets. The markets have been in moving when we've got CPI numbers on the dollar in particular, so just mark that out. That could be one to watch. And Wednesday, we've got the annual budget in the UK, so that's the pound there, and on the dollar, core retail sales, and from New Zealand, we've got the GDP announcement there. So let's watch out for any New Zealand pairs if we've got them. And on Thursday, we've got employment change from Australia on the Aussie, and then we have a big one on Euro, refinancing rate, policy statement, and press conference. So let's look out for that one on Euro. And on Friday, we end the week with also a more minor bit of economic news. Dollar preliminary consumer sentiment. It's not the most major one, but as well, might want to watch out for that in case it lines up with a setup towards the end of the week. Usually on Friday, the setup comes into play if the rest of the week it hasn't. So we'll have to be patient and sit on our hands, and if it comes to Friday, then it comes to Friday. Okay, so let's begin and have a look at what we've got for this week. I have picked out a few charts as always. So mixed bag as ever. You know how it goes here. Always pick and mix and see what's right in the market, what's the market is showing us. So let's start with the main players and then we move down the list. So the major pair for this week is the Aussie dollar. So zooming out, we can see that we've had this large impulse move, breaking structures here, and we are now overall on an assumed at the moment uptrend. So I'm going to take this as a retracement, and we can see we've had this retracement last week, closed bearish, and we've come to this price gap right here. And if you want to draw a fib, so here's a fib, and we have not quite touched the 61.8. So I'm expecting the market to come down further and do that. I always like to mark out this general area, then I'll get rid of the fib. So again, with that bearishness, I'll be looking for that bearish continuation to at least the low, and then further down to right into the box here in this area that we've got marked out, right into the retracement. So this little move here at the moment, it's around 130, 150 pips. If I zoom down into the lower time frame, what we can see is we've got these clear lower lows, lower highs, very clear trajectory, very clear direction here. So if we mark out an area that would be interested, which would be this area right here, if you want to mark take a fib and see where it is on the fib, then we've got the 61.8 right here. Okay, right. Okay, all right, lucky sneeze there. So this is the swing point, so I'll be looking for the market to react off this level and come into at least the low of last week, and then a little bit further down into the area. Let me just mark these prices out for you. So here's that 0.67 region and into the 0.65. So those are 2 reference points. So a swing, a reversal on price action round about here where we're at the moment, a bit further up into this zone right here, these candle reference points. That would be what I would like to see if I was going to be interested in a high probability setup, and then reaching and breaching these lows right here. So at the moment we've got nothing, just a bullish price action on the 4 hour. So let's see a reversal and then go with the flow. Okay, let's go to another Aussie pair. So let's have a look at Aussie CAD. Now let's start on the monthly. Once again, we've got a similar picture, don't we, to the Aussie dollar. So we had this downtrend, then we have this structures broken. So I'm looking at this as the impulsive major move up. We've got these strong bullish candles, and then this whole thing is the retracement. So last month we had a bearish month, clear to see, and if you have a look at the weekly, we've got that bearishness continuing to move down. Now if I draw a fib once again for the low to the high, we can see we've reached the halfway mark, and I would like to see it go into the 61.8 and below, as I was saying before. Remove fib, and we can see that we've got these reference point as the low, and then we've got the next reference point, which would be the start of this area right here. So here's that bearish week last week, bearishness on the monthly, at least in the short term. So let's have a look on the 4 hour and see what we can deduce from here. We've got these obvious lower lows, lower highs, and here is an area of interest where I'll be looking for the market to reverse from if it does. Now once again, nothing here. Let's have a wait for some price action for the market to do its thing, reverse around this area, and then come down. Now the high probability would be a break of this low right here, and once it breaks lower, the idea here in terms of high probability, a pullback or retracement to a better price, and then coming down into breaching the lows of last week, and then ultimately down here. So let me just put a little placeholder once again, just for you to reference. So here's the that price. Let me just zoom out a bit, make this easier. So here's 0.896, and up here where we are, let's wait for a reversal price action. So this is the overall idea on the Aussie CAD and that continuation. So if we break above these highs here, then this whole idea would be invalidated because we would have broken a major structural point. And as you can see, this area was an area where the market was bouncing off from. So if we come back and breach this, then we will have to scrap this whole idea, because this whole trending market down here would have been broken. Okay, so that's the idea on Aussie CAD. That's what I'm looking at here. If I move on to the next one, let's go to pound yen and have a look on the weekly on the pound yen. So I marked out this area before as a possible reversal point, and we did leave a wick to the upside. We right through it and then rejected off it, and now we're looking for that continuation to the downside. So far it's playing out. So far we have that idea. However, it's been a bit slow, and let me just remove these for a minute and remove this. So the market has reacted, and then now it is in a sort of little range. So if I want to look for more confirmation and look to see that it is indeed going to continue downwards, well, what I would like to see is first a break of the low to know that we are going lower. And then once we have a break and a pullback and creating a new swing in the market, if this is the high and this is the lower low, and we'll create another lower low, then once we get that pullback and then a continuation to the downside and to the obvious place, which would be these lows, and then the first reference point would be this gap right here, and then ultimately to this low. So again, if I place a price, it'd be the 1.55.5 level, and then after that we'll see if we actually come down and go even lower. So we'll have to take it step by step. It's quite a way away, more than 500 pips, so pound yen moves very fast. Let's see if we actually get that. For now, let's stick to what we see, what is obvious, not what we're thinking or imagining is going to happen. But let's go with what we're actually seeing right now in the market. The invalidation point would be up here. So if we breach this high, then I'm no longer interested in this trade, because we are going to be breaking higher and not the market is not going to be in line with what we're looking at, which is downside. So wait to see if that happens, and if it does indeed happen with this higher up here, if you want to place a price point, then I'm going to reevaluate. So for now, I'm still going to stay with the bias, kind of hesitating here. So let's see what happens if we continue to the downside. Okay, that's on the pound yen. Let's look at another pound pair here. We've got pound Swiss. Pound Swiss, let's go to the weekly. I've been looking at this for a little while, as you can see here are my markings, and been looking at the, if I can remember correctly, the sell scenario. So here was the first area I was looking at earlier, and now is the second one, and we have had reactions of both these levels, and this is the big one that we reacted from and moved lower. So now we move lower, and we've pinged this low here and broke through it. We haven't closed below, but now we may see further downside. So let me just remove everything off the chart. So that's no longer necessary. We had all of these reference points from last week, and yeah, this is what we were looking at. So here's the weekly picture, and you can see we're just hitting lower lows and lower highs. Last week we closed bearish, and that weakness indicates that there may be some more weakness in the market. Here was that previous low that we just broke through. However, I don't know whether we are going to continue to the downside, or this is just it just kind of peaks through and then reverses, which is what tends to happen when we breach major highs or lows. So the first reference point will be where we are here. The second one will be down here. Is a little bit uncertain at the moment because we're not really moving towards any significant areas. We are kind of stuck in, if you could see, a bigger long-term type of wedge here. So it's not the best, not the clearest price action, and not the clearest trade idea. So the question becomes now, are we going to break through this and continue to the downside, or are we going to have reversal? If you like, it's actually more accurate for me to place this kind of zone, because we have this zone of significance. Are we going to just reverse off here and move to the upside? Now, if I consider the downside would be this low right here towards this low, and that's about 150 pips away, and the upside would be, reference would be this high up here, and that is 270 pips away. So looking at the lower time frame, if we are going to go lower, what I would like to see is a break below this low. Let me just move the area here so it's cleaner. So a break below this low, and if we do break again below, then as you know, the drill, another swing, pullback, and then continuing to the downside. That would be my idea here, the pound Swiss, and that will be a little bit of a decent risk to reward. And the opposite will be true if we are going to break this whole downtrend, and we do have a break of structure, this one up here. That would indicate we are moving back up to the upside instead. And once again, I will do the same thing. If we break to the upside, then I will have this, now look at this area as an area to watch for. So I will be marking it something like this, and then looking for a retracement, pull back, and then continuing to the upside, and we have a nice risk to reward to see idea here to move higher instead. So you can see that each time we have respected these gaps of price in the market, and in this case we have now reached this zone. So I don't know whether we are going to continue lower or move higher. At the moment it's quite uncertain. The safer option will be to even wait for the daily, and for now we have very weak price action. So let's see how it plays out. It may need to be that it's better to wait for the end of the week and leave this one to next week, just because of the price point where we're at. So this makes it a lower probability idea, and if we watch for the weekly candle, that will make it a little bit easier for us to see how it plays out. At the moment we're at a significant level to watch out for, so don't want to be rushing into anything until we have real clarity. And yeah, the clarity will be big momentum move higher, breaking these highs, or a big momentum move lower and then showing us that we're going to continue lower to the downside. So that's the idea on the pound Swiss. I would say a bit lower probability than the others we've looked so far, really. Okay, now I'm going to move on to Euro New Zealand. And Euro New Zealand, looking at the weekly, I was looking at this Euro Aussie, Euro New Zealand for the last couple of weeks. So what we can see here is we broke these structures. We had this big impulsive move to the high. We had this retracement, and now we're continuing slowly, gradually to work our way back up to the upside. So what does that signify? Well, that means that I'm looking at this high as the target, and after that this reference high possibly there. So oops, let me just remove that. So where are we at right now? Well, we've got last week ended up closed bullish, broke the high of the week before, and that bullish momentum I'm looking to continue and move to the upside and take out this high. We're continuously making higher highs, continually pushing higher, and you can see every retracement is broken up and getting more bullish, continuing on the bullishness after a brief retracement and move higher, right? So with this in mind, with this bigger picture, let's look at the 4-hour and look at where we're at. So here we are at the moment, and I have this, you can see as obvious zone where we're looking at, and market bounced off here, moved higher, came back down again, and at the moment it is in this little range. What would be nice to see would be another move to the downside and get a much better price. The ideal price will be in this zone, and the reference point would be this low right here. So a breach of this low would be a major breach in the market structure, and I would leave this alone because I'm looking at higher prices, not lower. And as you can see, if it does move lower, then yeah, this idea of the continued bullishness would no longer be valid. So this would be the ideal price. However, if we don't get that and instead we move higher, so if we break this high and we create another swing in the market, then break lower to the downside right here, and then continuing higher would be what I'm looking at to take out this high and possibly beyond. So this would be the trade idea here. Let me just place the marker and this zone right here, you can see. So those are the two places of interest that I'm watching out for. Right now you can see that the market is leaving these wicks. It's rejecting, but we don't have any clear bullish price action. So if we come down again and make a nice, some kind of pin bar or a big bullish candle like this one here or like this one here, I'll be much more interested at the moment. So far you can see we're kind of stuck in the range, and we may come down and create another low. Who knows? So let's be flexible on this one, and again wait to see how it plays out. But overall the favor is to the upside and bullishness. All right. Okay, now let's move on to the others, the non-currencies. Let's move on to, let's have a look at the WS30, Wall Street 30. So that's the Dow Jones as it's known in other places, and the WS30, what we've got here is, if we look on the monthly, so we had this move lower, then we had a retracement higher of this level of this gap that I was talking about before, and we breached this high, and now we have gone into this brief pause, and now it looks like we are heading lower and breaching lows. So are we actually going higher or moving lower? Well, on the monthly, even though we've broken this structure, we have got a pause here, and we can see that the market now this month is breaking lower. Let's look on the weekly. You can see that on the weekly we have had a market tried to move higher, and we have now broken these structures and about to possibly break this low structure right here. So the question is, on the bigger time frame, are we in an uptrend or are we in a downtrend? So at the moment it's a little bit tricky to tell. We did have this very bullish impulsive move. However, these last few weeks we have been weak, and there's been recent weakness. So for now, going with where we are, I'll be looking at this as a weak market for the moment. If I draw a fib, then this whole move, we can see we just about reached the 50 level. So if we are going to continue bullishness, then I would expect it to be off the deeper retracement, which would be the 61.8 or 78 down here, which we haven't reached. So from here, let's say, would be continue upwards. However, because we're not there yet, I think, or I should say I suppose, that for now all I can say is that the probabilities seem to be to the downside to come into this 61 level at minimum, and then we see what happens from there if we get a reversal. So yeah, the idea for the moment, for the short term, is to the downside, because we are having weakness, and you can see every time the market tries to make a move higher, these last few weeks we've got very heavy rejecting candles to the downside, and it takes out the lows of these weeks, of these bullish weeks, and continuously rejects them. So for now I am looking at bearishness in the market, at least for this week, and then we'll see from there where we head to. So from here, which is around about this area, 32,800, until at least the low of last week, which is about 31,700, and then from there down here to about 3,100 or lower, 30,900, 30,900. So the area I'll be looking for is a retracement somewhere up here, and if I just go down a time frame, you can see that we had this very, very clear rejection of brief retracement up, broke these lows, and now we are possibly creating another swing. So the thinking here is, where are we going to reject from? We've got a level to watch out for up down here. And we also have a second one up here where you can see there's a, again, empty gap in the price. I always favor the more extreme side because we have a much more favorable price. In this case, we have a more expensive price to move to the downside and a better risk to reward. However, I'm going to be flexible, and if the market rejects off this lower level, then may want to watch out for that. I'm going to draw a possible trend line just to see where the market is going. And then let me just make this a little bit more clear. So this is the minor one, this is the major one I'm going to look for. So the idea here would be some kind of move, further move higher, and once you move higher to here, or as I say, favorable to the upside, then some kind of retracement and price action here to come down lower and take out the low of last week. So far, we're neither here nor there. If we do breach this low, then this will be a, well, we'll just have to let this one go because we don't have our entry price point or the way we want to see in terms of probabilities. So we're going to have to just let that one go. Okay. Let's wait for it to actually come to our price point. So here's the really favorable one, nice expensive price, and we have a good risk to reward to come to these lows and possibly lower. And if it just collapses and just falls further, then so be it. We'll just yeah, we'll have to readjust next week perhaps and see where it goes from there. So here are your reference points for the trade, and I do want to see some reversal price action, something very clear, and then momentum move down and further bearish, big bearish candles like these, like we've been seeing recently. So you can see moving higher, and then bang, collapses lower very sharply, higher, and then bang, collapses and takes out the lows. So that's the idea on the WS30. And now let's go to the final one, which we've been looking at for some time here now. An old favorite is that Bitcoin trader. So let's have a look on the weekly. This is what we looked at last week. We had these weakness in the market. I was looking at this gap in the market to be filled, and that is what we had. The market moving lower. However, I was looking at this price point and we never reached this level to go lower, and the market just collapsed and melted, really melted. You could see push down so heavy, in such a heavy way that we didn't even get this proper retracement. So, well, this is the way it is. Market is the way it is, does whatever it wants to do. We just have to go along with it. And this was the area I was looking to, and we did indeed reach that level. Now, we had this opening in the week, left a gap, and we opened to the upside. So what to do now? Is this a possible rejection of this level to continue moving higher? Well, we're going to have to see before we assume that as a fact. What I can see is this trend at the moment, and we haven't quite broken the trend. We haven't quite first of all, we haven't closed yet the day. We just opened in the week as it is in the time of this recording. So not certain quite yet. We're going to have to wait to see for more price action. Looking on the weekly, you can see last week was very, very bearish, and now we have this gap here. So what could happen is the market could come back down right here from our gap that I was looking at before, and reverse from here and come down and fill this area even further, even more. And if that happens, then we'll have another chance to look at this area again and continue on the uptrend, which I was looking at on the bigger picture before, if you remember, from this area up to these highs, which is a nice big juicy risk to reward idea. But we're going to have to wait for the market to play out a little bit more. We could see we closed this gap, and now we created another gap here. So we may come down once again, close it right down, and even reach this low, come down further, and then move higher. So I'm going to have to be flexible here and watch out. My reference point for this idea is this high up here. If we breach this high, then I'll be looking for higher prices. And if we don't, and we get this reversal of this area right here, then what I'll be interested in doing is looking at the move lower, creating another swing, and then actually coming down, back down into this zone, this area right here. And this would be a sell idea. And if we breach these highs and go higher, I would like to see a much clearer price action that it is breaching highs and then come down, pulling back, getting a better price, and then continue higher. So the much bigger time frame, much bigger picture is to the upside, because we are, if you have a look on the weekly, the idea was that we breached these highs and we are now going higher. Here's that big impulsive move, and this whole thing right here is a retracement. So with this being a retracement, retracements can be a little bit unpredictable. They can they're not as flowing, they're not as easy to trade. So we may have to sit this one out, and I would say be careful with this one, because the uncertainty comes back in, and we may have a ranging market. It may move sideways for some time before it makes up its mind and finally makes its move to the upside. So far we're going to have to be very flexible and see how it works out. So if we got this reaction of this level, which we still looked at last one, you can see the market jumped right back to it in a day with this huge gap. I mean, many trades will be taken out here, especially if you were in the short. So now let's come back. We've still got this gap as a reference point, a gap in the price, I mean the market, and then we may head lower, particularly with this sort of trend line. But I'm not really focused on the trend line. It's not the main point of focus here. The main point of focus is this zone, and then this reference point up here, if we do or don't break it. Okay, so that's my idea on Bitcoin, remembering that it's priced in dollars, so we reference any dollar news in case we have a match. Remembering, if I remember correctly, this is CPI on Tuesday this week. Okay, that's your lot for this week. Those are the high probability setups. As always, manage your risk, as I keep repeating. Always worth bearing in mind, always worth remembering, and let the market come to you. We have some better, easier setups this week. We have some lower probability, let's say, than usual. Go back if you want to have a look at that again, so replay the video. All right, guys. My name is Dima, and thank you very much for watching. As always, hope you have a good trading week. Pick your battles, pick your charts carefully based on the price action, and watch out for the news as they play out. If price action works in your favor with the news, after the news, the next day after the news, then make your plan and trade your plan. Okay, thanks very much for watching, and I'll see you next week as always with some more trade setup, some more ideas and high probability trade ideas. Okay, thanks guys, and see you on the next one. All right, bye for now.